All right, crypto market updates. So Bitcoin had a little bit of a fake out, as we can see, and it's V-bottoming right now. So this is pretty much like stop order hunting, right? Obviously, whales know that a lot of traders likely had some stops hidden behind this trend line, and they were basically triggered, pushed the price down, and now we're having a V-bottom. Right. So this is why I generally don't set hard stops myself, just for this reason, and why I always prefer to sell on the bounces as opposed to selling on the dips. For me, dips are always for buying and bounces are for selling. So basically, that said, this is the first sign of weakness, right? This could just be like it broke down and it bounced, and then if it breaks the line again, so this is what you want to look for, right? If we snap through this and break the line again, then it's possible that we'd get another washout and maybe make a new low, right? That said, I mean, the trend is still intact. We're still in the front side of the trend, but this could be the start of the backside. If we saw more red, if we had another red candle downwards, then that would definitely be the backside of the trend. And as mentioned earlier, if that were to happen, then ultimate dip buying area would be at prior resistance turn support. So if we start to kind of roll sideways, if we consolidate sideways and break down or break down past this line again, then I wouldn't be surprised to see the price hit down in this level as mentioned yesterday. And then obviously on the flip side, we've got fib extension level to the 7,000 mark as the next major area. General $7,000 area. And then obviously next level up is kind of close to the $10,000 area above that. Now let's see if we'll actually make it. I mean, on the one hand, if you look at the 1 week chart, this is definitely parabolic, right? This is trend has gone straight vertical. Obviously you can see the difference in the angles here. I mean, this is like a normal healthy bull trend, and then the angle changes a bit and it's okay, well, it's still healthy, but it's starting to get a little bit more vertical. Then of course the angle changes again, and now right now the current angle and trajectory we're on is like just straight up vertical. So it wouldn't surprise me to see some backside of the trend, but we are parabolic right now. So in a parabolic market, how high is high, right? It's sometimes it's difficult to necessarily nail tops on a parabolic market. It could go up this high, it could go up to 10,000, who knows, right? That's why you scale out profit and lock out profit incrementally. So, the entries are a lot easier. You've got this big sell-off, multiple days, multiple weeks of sell-off and blood, and then all of a sudden 1 week, 2 week, 3 weeks, 4 weeks, 5 weeks, 6 weeks, and now we're on week 7 since that major sell-off, right? So it's almost going on 2 months of bull right now. So it is possible we might push up for one last push before seeing some backside. But regardless of whether or not we roll over and crash at this level, or if we spike up and go parabolic, it doesn't really matter because a reversal is likely imminent, right? I mean, it's not a matter of if, it's a matter of when. It's counterforce. We're going to hit some counterforce. Now, as to whether or not it's just going to be a backside correction and more up, more bull trend, or whether that's it, and then that just pretty much nails the coffin for the bull trend and we go straight into bear, right? So we also got a taste on how altcoins looked as altcoins are bleeding. Also, something else I want to show, if you look at the 1 week stochastic RSI, it was kind of crossing over. Like we are starting to get some bearish divergence here. And if it crosses right here, then like we're kind of losing out on momentum, right? And you see how we made a new high, but we're making a low on the stochastic RSI. Well, there was another time that this happened, and it was right here, right? We had a high here, and then it went up higher, but it made a low and crossed under, right? So that could just, I mean, if we do cross here and crash, that could just lead to another dip buying opportunity at 3,000, and then maybe that would be fresh recharge momentum. We get an RV bottom, and then maybe that's where we would hit the 7,000 mark. But you can see based on these candles that we're definitely getting some sellers. You know, we got some sellers up here, sellers right here. We have a wick here, so buyer stepped in, right? And it's a green candle, so let's just let's see what happens. But I closed out because we reached a major milestone, a $5,000 area. I closed out 20% of my Bitcoin holdings into cold hard cash. I basically cashed out a chunk of my portfolio, and that's just a proper risk management, right? Bear trend strategy. If we do flip into bear mode, I also have a cash hedge from closing out some of my trades on one of my exchanges. And the reason for that is that anytime there's blood in the market, so for example, had a little bounce play on Ethereum, but anytime there's like major blood in the market, there's definitely some good bounce play opportunities on, especially on the dollar chart. So whereas Bitcoin lost a solid 20%, Ethereum lost 32% dollar wise. So if you basically having a USD cash hedge on one of my accounts means that I can continue to ride Bitcoin, to ride the Bitcoin trend. I can continue to ride altcoins if they start to take off, so on and so forth. But if all of a sudden the markets dump and sell off like they did, my cash hedge means I'll be able to, buy in a dip. And as you can see here, there is about a 26% difference. Now I did trade some of this. I got about 13% out of this move. I didn't get the bottom. I didn't get the top. I kind of closed out around 330 and I got in the mid 290s. But I basically just used a cash hedge that I had from closing out my Bitcoin trades. So I had some USD sitting on accounts. And just looking at altcoins. So I'm still holding all my altcoin positions, but you can tell a lot of them pulled back, retraced. Zcash was starting to make higher lows, and then it just kind of retraced. So it's still making a higher low, and there's a lot of traffic in through this area, right? So wouldn't surprise me if we did hit a reversal. I think it looks like it's in accumulation, so I'm still holding my Zcash position. You can kind of see here, broke the descending trend line, and now we're going sideways. So as long as that support holds up, we could start to ramp up on Zcash. So I'm still holding that, but I would just say for myself, I'm just going easy. I'm going lighter on the altcoins. Basically, I don't want more than 20% of my portfolio in altcoins right now. So even though I've got a shotgun approach and I'm spread out against several altcoins, I'm also being somewhat cautious. Ethereum Classic, so I'm up on Ethereum Classic still. So this one's a trade this one's probably the best trade, altcoin trade that I'm in right now. It's one of my larger positions too. So I bought down in this zone right here, right? And you can see based on the fib retracement, almost tagged to 20, the 78%, and we had a bit of a bull flag, and now we're ramping up and making a higher low. If I look at volume, it was a top volume coin. So it's pushing about a $250 million in trading volume, and that's not bad. It was really ramped up at one point. Other markets that I'm in, they're just kind of slow cookers. I mean, might be holding these a while, but they're smaller positions. Anytime I go in mid caps that are in accumulation, I just generally go in smaller positions. So if any one of these markets kind of dumps on you and doesn't work out, then it shouldn't really break the bank. So that's generally the rule of thumb when doing this. Edgeless, kind of same thing. And also the fact that CFI had a bit of a retrace, kind of had a full retrace back in. It was ramping up. It did look like it was going to break out. seems like it's correlated somewhat with the token sales that happen. You know, could be people buying for a token sell and then selling off or whatnot. Or this could just be because of all the ICO, fear, uncertainty, and doubt, right? So maybe people saw that and they saw that co-found it's based on a ICO model, helping ICOs out, crowdfund, and so perhaps we had some sell-off there as a result. But a lot of things sold off, right? A lot of markets sold off. So this is more like long-term. I'm not really interested in taking anything off the table until it actually does something. Possible reversal on ZRX. This is one of those new Polo ads. I'm in the red a little bit on this one, but again, I always position size in these kind of markets. These newer markets, if you're trying to buy at support or buy when they seem cheap or whatever, you just have to position size something that would actually be comfortable in bag holding, where you're not going to be sweating bullets, right? Because it could take a while to take off, right? I mean, Loon would be a prime example. Obviously, I've showed this example before, but this is definitely like a prime example of a market that, you know, let's say you bought Loon over here, and you're like, okay, I'm gonna get in on some Loon. Looks like it's cheap, and then next thing you know, you're in the red, right? Now, if you're in a position size that is too uncomfortable for you, then you could literally be minus 40 in the red on this, right? And that, for a lot of people, that would be perhaps unbearable. But if you're a seasoned altcoin trader, you know that when it's dirt cheap, and if you're patient, it might seem like you're minus 40 in the red, and then you know, boom, it kind of takes off and then turns into, you know, huge push up, right? And obviously this is probably just a whale playing with the price, and then it kind of just sold off, right? But it's kind of, Loon's now kind of at an area right now where, you know, possibly prior resistance turns support. But again, position sizing is key with these, right? So as a rule of thumb, I generally, unless I'm super bullish on something, or you see a lot of markets just popping off, like there was one point where I was 50% in altcoins when before Bitcoin broke out the all-time high, and altcoins just went flying, and that worked out really well, right? But you know, the markets are just kind of hot potato, right? So things will stay bull as long as new money starts coming in, but continues to come in. But as soon as it dries up, we could see some crashes and stuff, right? We might have to wait a while on certain things. So for the most part on this round, just because everything is up a whole lot higher, even though I'm in altcoins, I've just been a little bit more cautious with going in too heavy on any one position, of course, because if Bitcoin does turn bear, I mean, we definitely had a taste of what could happen when Bitcoin goes bear, right? Has a 3-day sell-off, and then altcoins, you know, drop like 50% type of thing, which definitely is a good buying opportunity. Even if you want to just catch quick bounces, you could catch multiple quick 20 to 30% bounces. So one of the markets I'm in actually is kind of taking off right now. You could see Golem starting to take off and ramp up. Let's see what the volume is on that. GNT, so 909 Bitcoin. So this is one that I'm in. Looks like some volume is coming in. Actually, that's Btrex. Let's see what Poloniex volume's like. Okay, so the volume's so on Poloniex. Definitely record-breaking volume on Btrex. But you can start to see here, you know, same kind of accumulation pattern, and now it's ramping up, right? So I'm in Golem, so if it takes off, I'll be able to ride a fresh bull trend. And this is a market that I started trading from all the way down here. Anyway, so the key is obviously risk management, and my game plan and strategy. If we do turn bear, I'm saying if, just because I prepare and look for possible bearishness, to look at the risk and look at both sides, doesn't necessarily mean I'm calling a top or I'm saying bear, right? The trend is still your friend, and we're still on the front side. However, my game plan for trading a bear trend will be to have USD in my trading accounts, and every time there's a violent shakeout and you've got multiple days of blood, like say 3 days of selling on Bitcoin, I'll take that USD, I'll throw it into some altcoins that sold off a bunch, and I'll just set shorter targets each way. So 20 to 30% targets. And, you know, if you're getting like 20 to 30%, might not seem like much. It's not as exciting as, you know, 1,000% or whatnot. But, you know, sometimes if you get a 10x or whatnot, you might have to wait months for that to happen, right? You could be riding that trend for months. Whereas like if you're in a bear trend, the interesting thing about going in a bear trend is, you know, you catch some dips and everything bounces. You get set shorter targets, 20, 30%. If you put a few $100,000 in catching those dips and you increase that by 20%, well, you know, on $200,000, for example, you're looking at like 40K US, right? And usually those bounces will just take a day or two, right? So that can be some pretty quick and efficient cash. And so the name of the game when we do turn bear, and I just saying this to prepare people, is you'll want to accumulate cash until we get back into the accumulation. You'll want to accumulate USD until Bitcoin goes all the way back down into accumulation, which would probably be at this lower level down here, right? It would probably be at like the 1,300 mark, you know, higher up here type of thing. Now this would be like if we go in a nasty bear trend. This is if we went sideways over here, this would kind of be this accumulation zone. So if you start trading all the way down and accumulate USD, by the time you get into accumulation, that's when you can just start loading the boat up on everything. Rinse and repeat, do the cycle all over again, right? So that's it for today's market update. Cheers.